Hello everyone. I'm going to just review the market. Just keep it simple, stick with the ES, and that's all. So first, let's get a higher time frame picture. On the left hand side, I have the SPY on the left two columns. Why? Because the SPY is really good with the daily volume. You'll see it's much easier to see climaxes and turning points with the SPY. So anyway, so nothing on the weekly that strikes me. We'll wait till Friday. On the daily, there was a lot of volume here, and now it's reversing back up. So here's the thing: you gotta take a look at the market breadth, which we'll do in a minute, because that's gonna tell you if this market is gonna break to the downside or if there's another wave up. So right now, market seems like it wants to upthrust this area or test it. So we'll see if it gets up there. I don't see any evidences of a turning point. There's a slight increase in volume. Nothing spectacular, but some increase in volume today versus yesterday. Right? Day before, you had a lot of volume, then you had less volume, then you have slightly increasing volume, but nothing. All right, now on the Renko chart, all right, so there was a supply area right here, and it seems like it's taken out. I don't know if it's upthrust or all of that, but this was a supply area right here, which caused the spring. And that spring initiated rally, took out the high of the supply area, but it's over here testing the resistance area. This is typically where you should see selling. You should see some selling here. So I think tomorrow we have some news. I don't know what news, but I know there's something coming out tomorrow. They might use that to set up the reversal to come back and test this area. So that's like about 36 points. We'll see if that's the case. There's a minor little upthrust here. So anyway, let's see what the medium time frame has to say about this. All right. So we had the initial breakout here with the climactic action here on the 63 and the 56, right? And then you had the break, and then you had a beautiful test which set up the, the short to then go down to this area, basically to support. So this was the base, this was the break, this was the test to get in, and this was the move down. It didn't continue in a downtrend. All it did was test support. So I mean, it's a small move, but a move nonetheless. Then the volume came in. The market picked up where? Right here and here and here. So there's volume here. I mean, you have a base developing. You see this base? So this is getting interesting because this is a base. This whole thing is a base. I mean, look at the volume that's picked up. That's 1,854 times 1,000 across the 4,440 level. So that's a base. I mean, it went up, it went down, the volume picked up right here. Right here, you see that? So it picked up the volume and then it broke the high. On increasing volume, bullish. That's bullish right there. That is bullish. So, and look at the POC build up right here. You have 12, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. But if you just look at the base, it's 1, 2, 3, 4, 5, 6, 7, 8, 9. 9. So if this is reaccumulation, with the base across the with a count across the 4440 level, and a breakout here 45 and 48. I mean, we're talking about we're talking about at least the highs should get tapped. We'll find out tomorrow, see if they take the highs out. But there's volume here, there's volume here, there's volume here. I mean, it's so obvious. Just like the supply was obvious up here, 56. Forgot what I had this on. The 56 and the 63, right? The supply came in and it broke down, and it just did all this shit over here. Then the volume picked up here and broke out here on increasing volume. So any pullback should be bought. You have your POC, you have your line of support, line of accumulation, boom. This even the volume here, look, the 12 right there. I think that's 12 million, I forget. Or one, anyway, so it's the biggest volume in the last 5. 2, 3, 4, 5. The last 5 up bars. That's the biggest volume since this climax. This right here, biggest volume since the climax in terms of bars. 1, 2, 3, 4. That's they may be telling you something. All right, so we have a higher time frame picture. The picture is that we're on the right hand side of a possible base of reaccumulation and looking to take out the high. All right, that's the picture. This is the base. Those are the volume prints clearly showing buying, and here the volume coming in today. All right, so and from the Renko we see that this high, this distribution was tapped here and went into a spring position. This is the spring, and increasing volume here, rallied. You might have a pullback to this area, and then we'll see if it takes out the highs or just see if it just goes. All right, now let's take a look at today's action. All right. So we'll just take a look at the tape reading chart. All right. Ranges. Okay, right there. All right, so here's what happened. You had selling here. Okay, now here's a lesson to learn. All right, when the market rallies and it has selling because a lot of volume trapped up there, do not be fooled into thinking that there's going to be a downtrend. That is a minor climax. The 36 here, this is a minor climax. Okay, what that means is it terminated the swing so you can start the pullback. Again, it terminates the swing, the rally, the up rally or upswing, and this is telling me that the market is going to go down, but it's not telling me that the trend is going to change. It's saying that the rally is done. Time to rotate downwards. That's it. How do you know? You just wait. Like, you have all this volume, right? Does it make a higher high? A little bit, but it doesn't have any fall through. It just pukes here. So you know that it's going to come back down lower. All right, until the opposite happens, which is this is the minor buying climax, is the minor selling climax. That's the minor buying climax when it comes to what? When it comes to the rally, and this right here is terminating the pullback. Now you could view it like that. You could also view it as reaccumulation. You could also view it as effort. You could also just view it as demand. That's demand. Why? Because believe it or not, it's basically buy low, sell high. You know, we can get as far away from the simple concept and go into the intricacies of, you know, all of the crazy order flow behaviors. But really, when it comes down to it, it's buy low, sell high. And you can see that clearly here because you had this pullback, it rally, sell high, selling confirmed, retest, going down, buyers come in, buyers confirmed. How do you know? The volume followed by the price action. The volume followed by the price action. And this is an important point. Remember, volume, what type of data is volume? Does it have direction? It does not have direction. So, what does that mean? All right, so this data type, I mean, if you want to think about it, volume, just volume, all right, there's no such thing as direction with volume. Volume has no direction. You have buyers and you have sellers. So they're both there. So that means that it has no such thing as direction. So this is called a scalar data type. Scalar data type has no direction. It's just an amount, say 1,000. It doesn't mean it's up 1,000 or down 1,000. Okay, it just is a amount. There's no direction. It's called scalar data type. Remember that. So how do you know if it's the sellers are stronger or the buyers or the sellers taking over or the demand? And that is because of price. Price has direction. So volume has no direction, but price has direction. So when you see this 36 followed by red, that means, then to keep it simple, that means it's supply. Or you can say supply is overcoming demand, or you can say supply is more aggressive than demand, and all of that. Or you can say the supply enters demand, right? So you have supply here determined by the volume and then the move. The volume and then the price action after it. After it will tell you, oh, this is supply. Because of price action after it goes down, it has direction. This is an amount, volume is scalar, price is directional. So volume plus direction. Here you have volume come in, then you have to wait. So volume comes in. If it's demand, you should get a green candle that takes out the high. Like here, if it's supply, you should have a red candle that takes out the low, right? So like over here, this is demand, but you only know this 31 is demand after this bar up, and then you can just buy the pullback, right? So here we know it's supply. Here 64, this is something right here, and this is a little bit hard to tell, but I know that since price is going down, obviously they're going to look for buys, right? So over here you have volume coming in, boom, bar goes up, takes out the high, must be demand, long. Here, bar going down, must be supply, right here. When you have here, that has no follow through and instead reverses their supply up here. Goes down, goes down, goes down. You're looking for demand, which means you need to first find volume. First find volume, then find direction. First find 41, then find a green bar that takes out the high. Confirmed. Demand. So if I was to ask you, it's becoming a teaching thing. All right, so the thing is, remember, anyone who says this is up volume, down volume, this is supply volume and demand volume, buddy, there's no such thing. Volume is volume. It doesn't have a direction. There's no direction. So you cannot be bullish and bearish. Price after that will tell you whether that supply was more aggressive or demand was more aggressive, and whether that volume is actually supply or demand, overtaking the other. All right. So the question here also is, what do you wait for? If you're bullish, you have to wait for volume to come in and then a move and then get in. So wait for volume to come in, then a move, and then get in. If it doesn't give you pullback, sorry, didn't give you pullback. What are you going to do? Here, if you're bearish up here, you have to wait for that volume to come in and then the move. And then you can take the short. Volume to come in, then the move. Volume to come in, then the move. Take the pullback. Volume to come in, take the move. Take the pullback. Volume to come in, the move. Tight in on pullback. Volume to come in, then the move. Sell the pullback. And also, it shouldn't be a little piss move. It should be a nice move. All right. I mean, if you have the volume and you have a little green bar after it, it doesn't make sense. Right? It means it's still holding. So the way you buy pullbacks, and I'm going to explain this because what you're taught is, okay, let me put the halfway back or Fibonacci or some fucking moving average, right? That's what you taught. You taught, all right, I see this, let me put a moving average. If it reverts to the mean, I'll buy the 20 MA. Or when the 9 crosses the I don't know, the short and the long term. Or diversion or something like that. So that is not the Wyckoff approach. That may be some other, I don't know, some other approach. But the Wyckoff approach is to look for reaccumulation on the pullback. And once you have an idea that reaccumulation is occurring and it moves, then where you've read it and you understand that, okay, this is reaccumulation, then you get in. So where is the reaccumulation here? All right. So the market rallies, right? You agree with me that this big bar up to here is your rally. Now it's pulling back. The first evidence of reaccumulation, if you're long, bullish, is the 64. 64,000 contracts just got bought on that pullback in that area. Okay? Does that mean, okay, let me jump in and say, oh yeah, 64,000, I'm going to buy? No. Why? Because you have no confirmation. Zero, zilch, nada. All right? So you continue to look for reaccumulation. And you notice it goes down again on heavy volume. Remember, buy low, sell high, right? So as it's pulling back, it's giving you the buy low. So someone's buying low here, 64,000 contracts, then goes lower, and someone bought 28,000, and then 32,000. Now, coincidentally, you have 64,000 here. Here, you have 60,000. You see that? Over here, they bought all at one price. Over here, it's like two different boxes. So here and here, they're splitting up. They're buying some here and then buying the rest here. 64 and another 60. Okay? So 120,000 contracts bought on the pullback. Do you now buy it? Again, the answer is no. Because you don't know whether this thing is supply or demand. What is it in terms of direction? Because volume is non-directional. If volume is non-directional, you don't know if it's going to go up, because the fucking thing is non-directional. It's just a lot of volume. It could be breakdowns, right? You're looking at here, oh, what the hell? Oh, some selling, effort, oh, okay, breakdown, right? So that could be in your mind as well, right? So you don't know until you see the move. So first thing is, you're looking for a pullback, you wait for the volumes to come in, and then you get the direction right there. On increasing direction, that's the biggest thrust in last two, I think it's more than that. Anyway, it pops up and takes out the high. Now we know demand reaccumulated. So now you can go long. Now you go long. Why? Because of reaccumulation. Why? Because what comes after accumulation and reaccumulation? Markup. Markup. So you need markup. The other thing is, if you just buy haphazardly on a pullback, like let's say you want to buy, I don't know, 68 or 72 or 78% pullback or 50% pullback, right? A lot of times they will work, you know, I'm not saying they won't work, but if a lot of times you get filled and you get stopped out, if it's a deep retracement or you put the stop in the wrong place, or they take out the low of the rally in certain markets, that's very, very common, especially on intraday charts. So that's why you don't want to just go, okay, let me buy 50% back. You want to wait for the volume, bang, 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 then the reversal, and look at the move afterwards. Boom. Pull back, volume comes in, reversal. They didn't give you the pullback here, but look at the move. If you got in here, you ride it. And it's not a big move, but intraday, relatively speaking, it's a good move. Right? So you have 1, 2, 3, 4, 5. That's 2.5R, 3R, 4R, 4.5R. So if you have anything to take away from this, the idea is, if you're going to buy a pullback, just wait for the volumes to come in. And B, it needs to be confirmed with price direction, because volume itself has no directional attribute. It is a scalar value. So you need volume to come in, then you need price to confirm direction. When price confirms direction with a higher high, or a high that takes out the prior high, it gives you a good opportunity to take the long. All right, I'm done. Take care. Also note, the other thing is, like, you have to be really careful with signals, because here's the thing, you just have to use some common sense here, because if you have this, right, you'll have a signal. Right? Now, when you have a rally and you have a pullback, you'll actually get a signal here too. Right? So you have a signal here, because you have buying that initiates the rally, and you have selling that initiates the pullback. But you have to understand that you're not supposed to take the sell here. You're supposed to use that selling in order to get in long. The pullback sets up the long signal opportunity. Not, even though it's selling, even though it'll give you a signal, you have to understand that this is signal that sets up the test, signal that sets up the pullback opportunity to go long. And many times, again, you're going to have this, and then you're going to have that, and you're going to have another signal here. Why? Because signals, all they tell you, buying pressure is coming in, selling pressure is coming in, buying pressure is coming in, selling pressure is coming in. So you'll get it on the rally as well, when the rally is initiated, as well as the pullback is initiated. So that's what you got to keep in mind. All right, take care. Bye.